Over the past week, NVIDIA has been hit with some of the most explosive allegations the AI market has ever seen. Accusations of a $610 billion circular financing loop, claims that its profits are being artificially boosted, and one of Wall Street's most legendary short sellers, Michael Burry, building a $186.6 million notational short position against the stock. NVIDIA has fired back with a detailed memo denying everything. No SPVs, no circular financing, cash flow real, and depreciation fully disclosed. So the question is simple. Is this noise or the beginning of the first real crack in the AI boom? And why are so many analysts suddenly staring at NVIDIA's depreciation line? Before we dive in, this is Maple Alex Trades, your guide to understanding US tech markets from a clear, analytical, professional perspective. If you want research-driven breakdowns without hype, make sure you hit follow. Now let's break down episode 1, NVIDIA's depreciation risk, the foundation of the short thesis. Let's start with the question everyone keeps asking. Why is depreciation, something most investors never think about, suddenly at the center of the NVIDIA debate? To answer that, we need a super simple explanation of what depreciation actually is. When a company buys something expensive like GPUs, AI servers, or factory equipment, it doesn't record the entire cost all at once. Instead, it spreads that cost across several years as the asset slowly loses value. That annual portion of the cost is called depreciation. Here's why it matters. If a company chooses to spread that cost over more years, then each year the expenses look smaller, margins look stronger, profits look bigger, and earnings per share look smoother. Nothing about real business changes, but financial statements can look a lot healthier. Now here's the data point that woke up short sellers. NVIDIA's revenue grew 62% year over year. This mismatch is where the suspicions begin. Michael Burry didn't randomly pick this angle. He has a history of spotting bubbles before they break. In his amplified analysis, the argument was simple. If depreciation is understated, profits are overstated. And here's the timeline. Burry builds a $186.6 million notional short position. He boosts an analysis pointing to depreciation risks. The analysis go viral. The $610 billion circular financing narrative spreads across the internet. Burry's message wasn't subtle. He's basically saying the AI boom is masking weak earnings quality. This doesn't prove NVIDIA manipulated anything, but it explains why short interests spiked so quickly. NVIDIA responded with unusual speed and detail, which already tells you this hit a sensitive spot. Their memo said, no SPVs, no circular financing, cash flow is real, bad debt is near zero, and depreciation policies are transparent. This is a full-force denial, not casual PR statement. But here's the nuance. A company can deny fraud and still use aggressive but legal accounting choices that make earnings look stronger. So NVIDIA is saying, we didn't commit fraud. Short sellers are saying, your earnings are over-optimized. Both statements can be true. Why depreciation links to the AI bubble? Because the AI industry is in the middle of the biggest CapEx boom in tech history. Meta, Amazon, Microsoft, everyone is spending tens of billions. But that spending won't grow forever. And when hyperscalers slow down, NVIDIA's numbers are the first to feel it. If depreciation schedules were aggressive, large write-downs in a downturn could crush earnings, just like Cisco during the dot-com collapse. This is the real fear. NVIDIA looks perfect when the cycle is going up, but depreciation amplifies the pain when the cycle turns. So here's the real question. Is this depreciation gap just a harmless accounting choice, or the first early warning signal of a much bigger problem inside the AI cycle? Because right now, NVIDIA's story looks flawless. And yes, depreciation is a meaningful red flag, but let's be clear, this alone isn't enough to convict NVIDIA or declare the AI boom is over. It's one piece of a much bigger picture. And that's why we're doing this series, to map out the full set of short seller arguments. If you're going to invest in NVIDIA, long or short, you need to understand more than just its beautiful earnings numbers. You need to know what could break the story. In episode 2, we'll dig into the second pillar of the short thesis, the AI CapEx bubble. What happens when Meta, Amazon, and Microsoft stop spending at today's insane pace? If this helped you see the other side of the AI trade, please follow Maple Alex Trades. Hit like and save this video. I'll see you next time.